All right, now we should be good to go. I was kind of wondering what was up. All right, it should be going live now. Should be good. There. It should be going live now. Oh, all right. Yeah, now we're definitely good. All right, cool. Cool. So yeah, if you guys didn't hear me earlier, basically I was just like saying that you know, we've had a couple good weeks overall since we started introducing Liberty X. I hope you guys have enjoyed the recaps that we've been doing lately on stream here. And yeah, man, Friday's what made last week kind of end on a really good note. But early in the week, it was kind of tough. I'm not going to lie. It was kind of not so many great trading days. I had a couple of no trading days. Tuesday was cool. And then Friday, we ended up ending the week on a higher note. But yeah, let's see what this week brings. All right. For those who maybe just started tapping into these Sunday market outlooks, pretty simply put, I'll be kind of prepping myself and everybody for kind of where we're at in the grand scheme of price from a higher time frame narrative. We'll recap a little bit of what happened last week, and then yeah, again, just kind of getting into the habit of, or keeping the habit of seeing where we're at, bigger picture, what moves we can expect overall for the week. Where are the major fair value gaps? Where are the major draws on liquidity? Just what's going to be the overall idea. Which, if you guys go back to last Sunday market outlook, if we replay price here, last Sunday, this is kind of where we were, and the idea was for us to really look at this level down here as the major kind of target, or basically just what made the most sense of where the market should go. If we're just looking at, let's say liquidity, right? Liquidity, where we have major, highs and lows that maybe, price may want to gravitate towards. And yeah, by the end of the week, we did see that price ended up, taking that liquidity. The intraday confirmations throughout the week, there was a couple of ideas, using our strategy where we're supposed to look for long opportunities or buys, and that kind of contradicted the bigger picture idea, which was to get to basically take all of these lows at some point. So that was what kind of made the market a little bit tough to trade early on in the week, getting bullish confirmations from the smaller time frames, but still not really being aligned with the bigger picture idea, which was to basically take these lows. And yeah, again, we ended up seeing that get taken on a massive bearish day, which was that day right there. So we had literally like one day where price just absolutely slammed and got down to this point. But now that that objective has been basically, completed, you got the liquidity taken. Now it's kind of like getting back to the drawing board of what's next, right? So that's what we're going to cover. As far as market structure, we're going to see we have this low point here. We had this high point, which was created Thursday. And then we ended up dropping off to this low point right here. So Friday, we'll show the last trade. I mean, you guys can look at the recaps, obviously, if you guys go to my YouTube videos that I've posted throughout the week, where you can kind of see on those specific days, before we have hindsight to see it all put together, of where my mind was on those specific days, what type of setups we took or avoided, and how we got to this point. But again, if we just kind of look at the bigger picture, heading into the new week, we got this extreme high from Thursday, this low that was from Friday, and now we're basically in the middle, or towards the middle to lower half of this range. Okay, so in general, if we pull up, a fib from the high point here to the low that was put on Friday, we're gonna be using a 33%. Like, we're gonna look at the range in three parts. So the upper third, the middle third, and the lower third. Okay, so you'll see, again, we have the upper third, we got the middle, and then we got the bottom. So in general, now that we're in this range of this extreme high, this extreme low, those are the two reference points of where we're at in the current range. Sometimes people, they get a little bit confused when I talk about ranges. To give you like another example of one, it's when we had, this high from here and then this low from here. And essentially, if we do the same, thing where we pull up a fib from the high to the low, the idea is that if we're in the lower part of the range, you either want to focus on buying back up into the upper third of the range and or avoiding trades altogether if you're getting like sell confirmations. So for example, if the strategy or the main things that we're looking for are signaling to sell this market, we just have to keep in mind it's not going to be as high of a probability scenario, simply because in the grand scheme of this whole range, we're already pretty low in price. And you always hear things like, buy low, sell high. And this is not one of those scenarios where you're selling high. In fact, you're selling pretty low compared to where we were, for example, up here. So that's why, for example, on this one specific day, if we pull up the range here, we had buy confirmations in this general area on that Thursday. And that's the day I took a loss because, again, we had buy confirmations with the strategy. But if we take into account where we were in the range, it was buying high. And so eventually that's what led to us hitting stop and then having that huge meltdown where I basically missed out on that whole move, So that's why it's important to try to keep in mind the range in our decision making. Sometimes we're not in a ranging market. We're in a market where, we're aggressively trending, for example. And so these type of conversations where I use these tools, you may not see me use it for a whole week or a couple weeks if we're in a really, trendy market. But now that we've kind of been a little bit more like forming pretty obvious ranges, in my opinion, it comes to mind for me to want to use that now. So how does that apply to where we're at now? Well, again, the bottom third of the range is basically all of this price action right here. And so if we get, heading into New York session tomorrow, price, let's say, still kind of hangs around this area, hopefully we get bullish confirmations because that would align with, where we're at in the range. If we get bullish confirmations down here, that's good because number one, we want to try to be buying the lower part of the range. And so if we get, our strategy telling us to go for buys, it makes it a safer, higher probability, idea. And the last piece of it is like, well, where's the next objective that stands out to me the most? Again, when we talked last Sunday, it was to go and take all of the liquidity from those lows. But now that that's taken, what's next? Well, price is always going to do one of two things. And sometimes, it does both things at the same time somewhat, which is seeking liquidity and then rebalancing. Okay. So in this situation, we are looking for rebalancing as the main thing that stands out to me because, again, we have these really big fair value gaps that were left behind from that Thursday drop. So that's really where I expect the market to head towards. Okay. On the 1 hour time frame, obviously you have this one that you guys see me highlight here. I'm gonna drop the visibility on that one to just that 1 hour time frame here. And on the 30-minute, we have two, right? We have this one. And then we also have the one right above it as well. So I have an indicator that just auto highlights that for me. It just kind of saves me time, to be honest, and it just, it just makes it very obvious for me and for those watching me pull up the chart to kind of see what I'm talking about. But yeah, basically until we clear out both of those imbalances, I will have the idea of wanting to look for bullish positions. Okay, so we do want to try to get price down here and then look for bullish positions to ultimately take out those fair value gaps. Now, something important to note as well is, you have these fair value gaps, especially like the highest one right there, sitting in that upper third of that range. So this, upper third of the range is gonna be where, if we're in buy positions, we'd want to be, looking to exit those positions already, like take profit there. Okay. And if, let's say, this is obviously a very potential thing too, is we could easily have now during Asian session and let's say London session, just completely rally up into those fair value gaps and into that upper third of the range. Well, that means now when we step into New York session, I will actually want to have a bearish bias because these objectives have now been hit. We're in the upper part of the range, and then we can look to maybe short back down, let's say to the weekly open or something like that. So it's obviously a bit premature to, let's say jump into a trade or to know exactly what we're gonna, look for come New York session, because ultimately we have 2 sessions taking place before that. So Asia from basically, I mean, you can say now, but it technically starts at 7 p.m. in about the next 45 minutes. So anything that happens from basically now until 8, 9 in the morning is all gonna be Asia, London, pre-New York. So a lot can happen in that time frame, and that can change, ultimately what exact trade I'll be looking for tomorrow. But yeah, this is the idea, always looking at liquidity and or fair value gaps, which is an imbalance in the market, as what drives me to have a bias for price to go up, down, for example. So yeah, for now, I want to see price continue to travel upwards and get into this level. And once we're up in that level, I'd either be looking for shorts, or if I'm already in buy positions, looking to take profit and exit positions around there. Okay. Now, if we look at also the last major low that was put in, we have this low that created this high, and then you have this new lower high. Lower low, sorry. So technically this specific structure that we're seeing here is bearish. If we look at this push up, this drop that formed a new low, now we should be getting retracements up in here and potentially forming again another new low. Now, I wouldn't be so quick to just say that I do expect, for example, this week to take out this low, for example, just yet, because we already took out a major objective, which was, those major lows right here. So sometimes market structure could say that it's bearish on the higher time frames. Like you have this push, a drop, you should get a pullback and a continuation, right? That's just like trend 101. You had like this low point, price comes up. So again, we can kind of use the last week as another example. You had this low, creates this high, right? Price pulls up and drops below. So now when price pulls up, we're in a retracement very deep, but still respecting that high, and we formed a new low. So we could continue that overall flow of making another pullback and then making another new low. The only thing that could really kind of sabotage that kind of like easy to spot idea is, well, this, for example, low over here did not take out any like major objective, like that liquidity that we were targeting from last week. But this week we did. So like these lows did take that major, liquidity level. So that could be the catalyst that shifts the structure overall. Meaning that we could have this push and then a drop, and we could get a retracement, and maybe even get a little bit of a drop, but it might actually not break this low. Like we could see it drop, respect the low, and actually start shifting upwards and forming a whole new trend. Right? So that scenario could very well be possible. So if I were to draw that like in, let's say, a diagram format to maybe give you a better visual understanding, is, you know, let's say we have these equal lows here, like price forms these equal lows, right? And then it comes up, okay? We can have like a whole bunch of liquidity down here, right? You have like a bunch of equal lows where price formed like a support level, you could say, right? Cool. Now price, you know, slows down and we start to move down. We give a pullback, we make a new leg down, we give a pullback, we give a new leg down, okay? And now we got to look at something here, right? So for example, if we see this high and we form this little low here, price pulls up and respects this high, and then it breaks a new low below here, you're in a bearish market structure now, because you had a high, a low, price did not make a new high, and then formed a new lower low. That shows you this is the peak. Price dropped, tried to stay above but could not, and then ends up dropping again. So you have two legs of price dropping. So now when price pulls up, you should be focused on selling that and then making a new low below here, like this, right? So that's the idea of understanding market structure and pullbacks and continuations and all that. However, there's a difference now between, for example, us wanting to use this leg, for example, as a reference point, right? So you have this high, this low, and then you have this low. So now we know, okay, well, price had this high, it failed to make a new high, we broke structure below this low. So now if it comes and makes a pullback, I want to be focused on selling somewhere here with this high being respected, and then us breaking a new low to continue that trend. Cool. So maybe you do execute sells up in there and you know, cash out with a nice drop. So what's the difference, for example, of us using this range and selling this compared to us using this low and this high and now us breaking a new low? Why is it different if we want to try to sell a pullback here? Well, it's not that you can't. You could still sell this, for example, but the difference is this low right here did not take out the major objective. And so when it does this pullback, we know, hey, if this major objective that we identify is still there, then I'm still wanting to, you know, trust that we're still bearish, because we need to take that out first. But once we take that out, which now we have here with this low, that could be the last, like that could be the lowest that it wants to go. So yeah, you can still maybe catch a pullback here, but I wouldn't be surprised if now this low gets respected and price actually starts to shift up. So you can still catch like a retracement and a trade there, but you might not be able to form a new low. And so if you don't take profit somewhere in here, you can eventually go and hit break even or even a stop loss or whatever. Because you may not realize that the difference of why, you know, this leg right here of price pulling back into here and forming a new low, you can't probably do that again because this low did take a major objective. This one did not. And so that's like a diagram version of the same thing we're seeing right now. But just always keep in mind, if a major objective gets hit, that trend may finally be over. Again, if you're a little bit newer, that could be a lot to kind of try to process at one time. But, you know, it's just literally repetition, guys. Everything's about repetition. So, again, this is the main objective that I was looking at from last week. And so when price dropped down here and formed this high, okay, we saw a nice sell-off from there. But now this low that was put in is not the same as this low. It's not the same because Again, this low point here still had not taken this major level, but this one did. So now if and when we get this pullback here, we might see a sell-off temporarily, but you're not going to necessarily get this huge move that drops and breaks again. I'm not saying this can't happen, but you just got to be mindful that we did just take a major sell side objective here. So when we form this low and we potentially start to move back down, this could ultimately be respected and be the start of a new trend that shifts and starts, moving back up to, like, let's say all-time highs. That's where we can look at fundamentals and try to support that idea overall. But again, the market at the end of the day is just looking for ways to make the most money off people and to create efficiency. That's why if you look at like all these fair value gaps here, you can see these moments where price comes into those fair value gaps and sells off. Price comes into those fair value gaps and sells off. And so those are those moments where you have rebalancing plays, and then there's other times where you're going to have the liquidity drop plays. This whole big, Thursday sell-off, I mean, it was a historic day. Like, it was a historic sell-off in the market. And it's because we had a huge liquidity level here that had been forming since the end of September. You're talking about a 2-month buildup that was basically wiped in like that one really strong day right there. Obviously, it's not just that one day that erased 2 months of price. We obviously had a drop from the high up into that point that was from the 29th of October to the 20th of November. So it took about 3 weeks to make like this portion of the drop. And then in literally a day, it completed the rest of the drop, if that makes sense. So it took like, 3 weeks to drop from all-time highs up until so hold on, let me see, from the low here. Let's see if my math is mathing today. Halfway. Yeah, so literally from the all-time high to where like all that accumulation of liquidity started down here, it took like 3 weeks for price to get halfway down there, and then in one day it completed the rest of the half. So in all that 2-month buildup of price action, half of it got wiped out in 3 weeks, and the rest of the other half got wiped out in a single day. That's why it was a very historic day. So again, if you have such a dramatic drop off in the market, you got to think like that type of day that I say is historic, that puts a lot of fear into the market. That creates a lot of headlines of people being very pessimistic. And you got to understand, like, retail traders, especially, like, a lot of their focus is not really so much emotionally invested into the stock market as much as like crypto. I might be talking ish because I don't really have the exact statistic to back that up, but just as a general like feel of people that I talk to, whether it's like friends, family, or like casual traders and investors, like people that don't really live this life, they just kind of like pop in here and there whenever they think there's like a quick little money play with Bitcoin or this new coin. Like, and you see, I talk about crypto because that's like the first thing people talk about. Like, I don't really hear the average person now get so excited about like, yo, bro, did you see Tesla stock? I'm getting a bunch of that. Obviously, there are people interested in stocks in general at all times. But I feel like crypto, ever since it's had its initial rise post-COVID, like people, the average non-trader person, it's like they still want to see that sector do really well. So point is, why do I bring that up is because people are seeing the the meltdown that we're seeing with crypto right now, and they usually will attribute that to like all markets. So if Bitcoin dropped from like 125K or whatever all the way down to 80,000, they're like, oh my god, like that's crazy, the market's crashing. They associate that with everything. Like the average person will hear that Bitcoin's crashing like that, And a lot of them will also think like, oh, that means the stock market and the economy and everything's doing bad. And I mean, that's obviously not the case. It just that's not a direct correlation always. But the idea I'm trying to give you guys is that the sentiment of like the crowd is that things are bad, right? So I actually like that if I'm bullish. You know, I like to have as much pessimism and doubt in the market as possible if my plan is to buy. Whether that's crypto, whether it's gold, it doesn't really matter. It's just the psychology of trading, you know? So, yeah, we had a historic stock market crash day on Thursday. We had a baby little bit of a recovery on Friday, which we did catch that buy if you follow the strategy and all that. But I don't think we're done with that. You know, I still think that we have more ways to go. And even if we have another drop off, I think eventually we will also kind of come back up. Just because I don't really see any other like higher time frame objectives right now that, you know, may want the market to come lower. The next, like if we just look at things from afar, the next like major liquidity, there's just nothing that really stood out to me as much as what we saw here. Like this flat bottom candle and all that stuff built up, that was just something that was like irresistible. If we look at something like a monthly time frame, like we start to really go macro, then of course there's other things that we can look to. For example, like this monthly fair value gap down here. You know, that's an inefficiency on a very high time frame that at some point we could see the market want to visit, you know. So yeah, of course there's definitely time for us to still, you know, drop off, but I'm not a swing trader either. So for us to get all the way back down here, I'm not going to be trying to short every day until we get there. You know, there's going to be days where we can get bullish price action. So as far as like relative to where we're at in price right now, the most obvious thing for us to focus on is just rebalancing that drop from Thursday and then taking it from there. So no need to get too ahead of ourselves, but that's kind of, you know, what I would see first. Yeah. All right. So fundamentals wise, we do have some news on Tuesday with PPI. We have unemployment claims on Wednesday. And then obviously Thursday is Thanksgiving. So Thursday, Friday, I'm not sure how Friday will bounce back after a holiday and then heading into a weekend. I'd say the majority of our trades, we probably want to get them in from Monday to Wednesday, especially that we have high impact news. You know, those 2 days before the holiday. So something to pay attention to there. And yeah, next week will be NFP week because we have the first. Is it NFP week? Are they gonna jump it to the second week? No. Why don't I see non-farm payroll here? Well, I'll revisit that heading into next week. That's next week, next week anyway. So, but yeah, Tuesday and Wednesdays where we have the volume coming in from news at least. So, you know, we'll pay attention to that. All right, let me see what's up with the chat here. Let's see. More probable that it changes the trend again. Yeah, I mean, look, we don't really have any evidence, of course, from like a technical analysis standpoint that we are gonna get a reversal back to like, you know, the highs. But whenever a higher time frame objective gets taken, that's typically the catalyst that allows us to do that shift. Because the average person can look at this market and see that we're clearly in a downtrend, you know? Like we had this high, we formed this low here, price shifted structure. You could have sold, price pulls back, you sell, price pulls back, you sell, price pulls back, you sell, price pulls back, you sell. Like over and over, all these major pullbacks, you could have just kept selling. And dude, like you were doing good, you know? So technically, if we follow all of this, right, we should be able to sell up here. And there's no problem with doing that. You know, it makes sense to do so. You know, letting price pull back, somewhere between 62 to 78% is always usually those like retracement levels that you know, are like known as the high probability Fibonacci retracement levels that you want to try to snipe a sell from, you know. So anywhere above 62 to 78, you can see that 62 to 78 also falls inside of that fair value gap, which is a bearish fair value gap. Market structure is bearish. So again, pushing price up into there and then selling from there is not necessarily a bad idea. I just don't know if we'll end up breaking the low. We could always even come very close to it, respect it, and then shift. So I would still say, like, if you're again on the lower part of the range, somewhere like where price was at on Friday, I would still be very bullish on buying down there. But if and when we come back up into anything past 62 to 78% levels here, I would definitely exit buy positions or short from there, depending on the timing. And then from there, we got to really see, because as soon as we get that sell-off from up in here, it's about how much of a sell-off we're going to get that really will give me a better idea of what the market's trying to do from a macro perspective, right? So like if we react from there and break a new low, then we're definitely super bearish, because we already took a high time frame objective with this low right here. So if we take that objective, push back, and still come lower, I mean, it's then kind of showing us that it has other things down here that it maybe wants to get to. But if we get a rejection from like up here and price drops, but it doesn't break a new low, and then price comes back up above the reaction here, then that's where I'm like, okay, we're starting to really go potentially bullish to take this high, this high, this high. You know, so again, it's the same idea of understanding liquidity, market structure, and all that stuff. So for example, like a whole reversal, again, is you're in a uptrend, or I'm sorry, you're at the peak here, and price starts to shift lower, shift lower, shift lower. You know, you're seeing these lower highs forming, and you can keep selling lower highs, right? Keep selling lower highs, keep selling lower highs, because you're trending that way. But at some point, you're gonna have a reversal. It's just a matter of when. So you got these pullbacks, 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 and here you form, for example, this low. So at this point, you're like, okay, if we pull back up into here, we're gonna sell. And that is a good idea, right? So you can sell up here, but then if price gives you that reaction, but doesn't break a new low, maybe it stalls out right here, and then starts to shift above this high, well, now you're starting to see the beginning of a reversal pattern, you know, because you had this low, price pulled up, reacted, but did not form a new low, and also pushes back above this lower high. That's now the beginning of a real reversal, right? So you'll see this a lot, especially on like a 1 minute or a 5 minute time frame. But what makes it significant is when we start seeing something like that happen on like the 1 hour time frame, the 4 hour time frame, because now we're not talking about small times. So again, that would look something like where price comes up into here, respects this low, bottoms out somewhere close to it, and then we start to shift above that reaction, right? You start shifting above that reaction. Once you see that, then you start looking at, okay, we have reversals, price is not making new lows. What are the highs that price is going to want to target? It would be these two, and it would be these up here as the next logical liquidity targets. So that's why, like, we can only assume what we see right now. You know, you can't try to freaking predict a whole couple weeks of price necessarily from the get-go. So the smart thing to do is focus on buying down here to take price up to here, and then selling from there. And once we get that, then we gotta really wait. Then we gotta wait, because we don't know if it's gonna do this, or if it's gonna do this and shift. That will be the mystery. It's when we react to these fair value gaps here and give that reaction away, whether it will continue or whether it will stall out and reverse from there. That's gonna be the biggest thing to pay attention to. And I don't know how fast we'll see that. This might literally happen starting tomorrow. You know, it could happen by Tuesday, Wednesday. It just really depends. Again, having a holiday, a major holiday on Thursday will kind of impact the timeline a little bit, because we might get that formation happening throughout the week, and then Thursday kind of like pauses everything, and maybe like until Monday of next week is where we can resume the whole you know, the whole journey that price wants to take. The 10 a.m. candle have been against us last week, hoping for a better week. Okay, so I do want to talk on that before we get up out of here, because that is important. It was against us in certain scenarios, and in other scenarios it wasn't, depending how you manage the trade. So the trade management part is the tricky part. But yeah, in general, compared to the week before, it was not as easy. I'll definitely say that. So I want to show that real quick here. How do you think they go down for the next week? How far? Well, I don't know how you worded that there. I never know how far something could go. You know, nobody knows that. You just look at like you look at where price has like very significant fair value gaps or lows. So like, for example, if we're looking to the downside, like this looks very obvious here, right? But for example, all of this, there's really nothing here that I can see. This was more obvious because you had a lot of lows all bunched up together. The only other lows that kind of stand out to me here are, for example, these lows right here. So like these lows, if price really wants to keep going down, this is, you know, a group of lows that makes a little bit of sense here, right? Then you have like this low as well down here, but you know, we'll start with these. So for price to keep going down, this would be the next area for me. If I'm looking at this chart, you know, that kind of stands out to me. So we took out these major lows. Now price is pulling back, and these would be the next lows if price really wants to keep going down. Okay, but we don't know, because again, if the most obvious ones were these, and we've already seen price dropping for the last, what, since October 29th. So we're closing in on an entire month of price going down. The stock market overall tends to be bullish, right? Historically. So if we had a whole month of price dropping and we just took a major sell side liquidity target, like it very well could be the thing that, again, maybe we get a reaction one more time, but price respects that low, and then we start shifting up to take out all these highs. That's why sometimes you got to look at the bigger picture, right? And then we use the daily things that we look for to support the macro idea. Because, for example, like the 10 a.m. candle stuff, right? Some of the days it was telling us that we had bullish confirmations, okay? Now, here's the thing. If it's telling us bullish confirmations, we have to take bullish trades. If not, what's the point of following the strategy, right? But if you feel very strongly that this is like the objective, that overall price should be going down, what do you do in that situation? I would not recommend going against the strategy too much, because then you're going to confuse yourself, because you're reinforcing the belief that, oh, I can go against my strategy and it'll work out for me. That's a dangerous thing to do, because then when the strategy realigns and it starts doing well again, where it is aligned with the higher time frame narrative, you're not going to trust it anymore, because you've already seen it work where you go against it on purpose and make money. So why would you follow it to make money? You get me? Like, if you do that, you can confuse yourself and kind of start losing trust in your system. So the real response to it is you take the buy setups anyways and lose on those specific days, and allow for the long sample size, the large sample size, to pay you back. Or if you put that much of a weight on your bias being bearish on the higher time frames, you simply don't take a trade. So that's what I did. You know, there was 2 no trade days. There was 2 no trade days because price wasn't really giving me those actual entries that I felt confident in to go against this higher time frame narrative, and we just simply sat out of it, you know. So that's really what you got to keep in mind. Now, for somebody again who's a little bit newer and is not so experienced, that's easier said than done, you know. Like, you're not gonna necessarily know to look at the higher time frame narrative or to know what the next main thing the market should be going for. You know, that's why you watch this probably sometimes, right? Like, you want to hear my thoughts on it. So those are things we got to work on, you know. Like, you can trade a model and a strategy and do well, but obviously if you get a deeper understanding of not just tunnel visioning into the strategy, but actually understanding like where we're at overall in price, understanding market structure, it helps. It helps to like know when your strategy should be doing well and when it might struggle, right? So like last Sunday, I was saying, hey, the main idea is to get down to those lows. So every time we had a bullish confirmation day, I was already like, damn, I don't like that because I know that overall the market should want to get to these big liquidity levels. But what do? Do I go against my strategy? Maybe sit out of the market, or still take the buy anyways and take a loss? You know, there's only 3 things you could do. There's 3 things you could do. Follow the strategy and potentially lose because the overall time frame is just stronger than the 4-hour candle. You take the trade and lose and allow the large sample size to hopefully pay you back in the long run, or sit out and not take a trade because everything is not super aligned the way that maybe you would prefer for it to be. And that's what you gotta understand that. So yeah, super fast. Again, you guys can check the recaps. Let me just show you here. API. If you go to the channel, you guys can see these recaps, right? So the recaps of all these different days. I started it on Tuesday, so I didn't actually show Monday. Monday was an no trade day anyways, so in reality there wasn't really much to talk about, and I kind of talked about Monday I think on this first video from Tuesday, so you guys can check that out. Okay, but overall, if we look at where's Monday here, Monday, oh hold on, this is Tuesday, Monday. All right. So yeah, Monday, okay, now I know where I'm at. So Monday's 10 a.m. candle was literally like right here. All right, so the only opportunity that we would be looking for that day was to go long because of bullish confirmations with the strategy that day. We never actually ended up crossing back above. Like, price literally like got to 10 a.m. and just instantly rejected. So we never really got like that shift above 10 a.m. So I didn't trade that day. That was Monday. Tuesday, the sells were somewhere around here. 10 a.m. open. Yeah, I think it was like right here. And the sells were like short-lived. These sells ran for like a 2-to-1. Yeah, you see it ran for about a little over a 2-to-1, but a 2-to-1 is, you know, what we showed it as when we were trading live. And then Wednesday was another no trade day because the 10 a.m. candle was like, had opened up like right here. And the reason why this one was a no trade day was because technically you could see that it did shift back above here, but it shifted like at the end of the day when we had the Nvidia news, and that was like post FOMC. So yeah, if this would have been like, you know, earlier in the day, we would have been able to take like a trade like this, for example. But it was like crossing at 4:30 p.m., like right before market closure. We had just had FOMC. We had the Nvidia earnings come out like at 4, but it, you know, they started seeing the effects of it like at 4:30, 4:45. So yeah, I'm not taking a trade 15 minutes before market closure, even if my confirmations are there, you know. So that's why that was a no trade day. And then Thursday we had like the candle somewhere around here, and it was buys, and it went up a little bit and ended up hitting stop loss after, and that was obviously like that big meltdown day. So I'm obviously doing like a super fast recap of the week. You guys can check out the full recaps on the YouTube, but point is there was like 2 no trade days. We had a 2-to-1, which is what my like real minimum targets are for me personally. And then I took a L here, and then on Friday is where we finally like actually had a clean trade, where 10 a.m. was like somewhere. It was like somewhere like right here. It was like right here, and price ends up dropping off, and then we had the bullish cross right here, and so the buys for that one did run for over a 4-to-1. It actually ran for like a 8-to-1, or like a 8 or 9-to-1 by the end of the day. But based off of the way I would manage this position and everything, I definitely was not gonna mess around and find out. So the 4-to-1 was like right here. So yeah, again, there was more profit to be made on that day. Oh, actually, hold on. Kind of lying here, low key. The entry was a little bit higher, bro. There we go. The entry was actually like right around here, somewhere around there. I remember it hit 4-to-1 like right to like the T. Yeah. I don't know. I'm not gonna do that whole recap right now again, so bear with me. But this was more like it. It was like 4-to-1 was like tapping right into that fair value gap, and that's why we got that big drop off. So yeah, Fridays will kind of follow the strategies confirmations, and this was a really good entry to end the week. But yes, overall there was a couple no trade days and all that stuff, so we'll see. So for example, tomorrow, and we'll end with this. Looking at the bigger picture again. Delete. If we can get, let's say, price to stay somewhere down here by New York session, I would prefer to have a bullish 6 a.m. candle so we can look for buys, and then we take it up to here. Okay, but we need price to basically stall out during London and all that, and then we need to have our 4-hour bullish confirmation there, and vice versa. If we see price actually just push London and Asia, hopefully by the time we are somewhere up here, if we get a bearish 6 a.m. candle to give us bearish confirmations, then I'd be looking to sell that back down somewhere to here. Not necessarily to break the low, but at least to get a sizable move. Well, hopefully that makes sense. Obviously, if you have no idea how the strategy actually works, you can see some of it on the YouTube recaps that I've been posting here, but ultimately where people come to learn it and actually trade live with me is on Akashex. I'm sure most of you guys are from Akashex, if not all of you. So you guys can learn from my pre-recorded live sessions, trading live with me, all that good stuff. But if you're not a part of Akashex, you guys can definitely hit the links in the description of the live and all my videos. Akashex.com/mlantig, where you guys can get started on there, and yeah, be an actual part of the movement. But that's really it. Pretty lengthy, or not lengthy, but like a good detailed explanation of my thoughts for where we're heading into the week, and even recapping a little bit of what happened last week. So yeah, hope you guys got some value from that today. But yeah, check the links in the description of this. If you guys want to kind of connect with me more on a one-on-one basis, if you guys are not in Akashic, you guys can also get started there. You'll probably start seeing me post links as well for alpha futures. I know some of us are looking to expand different forms of where we acquire capital and stuff. If you like the funded routes, I've been doing a lot more future stuff lately, and alpha is really cool. Obviously there's a lot of options, and you guys should do your research and ultimately like where you're trading at, but you guys will see some links on there for alpha as well. But yeah, man, that's pretty much it overall. Hey, what's up, Lisa? All right, so yeah, guys, I will catch you on the next one. But I hope you guys have an amazing rest of your Sunday. Tomorrow we stream on Akashex in Spanish at 11 a.m. Eastern. So, I mean, maybe I'll call a trade alert following the strategy before the session, since there's like a whole hour of price action leading up into that session. Since I start trading at 10 a.m. If we don't really get anything activated, maybe I trade actually on the session at 11 a.m. So it just depends how price forms, how it plays out, and then yeah. So I'll see you guys on there. English is Tuesday, Wednesday, Thursdays for Akashic, so keep that in mind as well. But yeah, guys, much love. I do appreciate y'all for tapping in with me on a Sunday night. Depending on where you're at, it's probably even really late if you're somewhere overseas. So much love, guys. I will catch you on the next one.